After touring hundreds of new construction homes in the Sacramento region, both with my clients and while filming my other YouTube channel, I've noticed some really important aspects and things you should definitely be aware of that buyers don't realize until it's too late. Whether you're thinking about buying a new home in a brand new home development, or you're just curious about the process, I'm going to share the top 5 red flags that you definitely should be aware of that could save you a lot of money, stress, or surprises. And I tell you, wait till the end, because the last red flag I'm going to share with you guys in today's video could literally cost you over $1,000 per year if you are not careful. Most of you who follow my YouTube channel know that I'm a local real estate agent here covering the greater Sacramento area, and we have a ton of home building going on in our area. This year, I have toured hundreds of these brand new houses to share with my clients, but also on my second YouTube channel as well. So from that experience, I have learned so much, and I'm going to share the top 5 red flags that you should be aware of whether you're looking to buy a brand new house in the Sacramento region or in your neck of the woods. And if you're new here, I cover everything real estate related nationwide, also in Florida, Texas, and California as well. So I invite you to subscribe if you haven't done so already, and also hit the like button if you guys get any value out of today's video. This is a little bit different of a different content that I normally post on this channel. But I do want to incorporate things that actually help buyers rather than just sharing market updates on this channel. So I want to kind of provide some tips and tricks for buyers and sellers right now. So number 1, this is the first red flag. One of the first things that buyers are shocked to see is that brand new houses do not come with a landscaped backyard. It's unlandscaped. It's a dirt backyard, unlike the model houses you see that have all the upgrades, and on top of that has a beautiful landscaped backyard. If you're looking to buy a brand new house in a larger development, normally it's just a dirt lot and it's not landscaped. Now, in general, builders cover the basics such as drainage, but if you want a finished, beautiful backyard with irrigation or just a decent concrete patio, then that's on you. And on top of that, it is not cheap to landscape a small backyard. A simple backyard project can easily cost well over $10,000. And if you want something more elaborate, such as turf, a gas fire pit, a lot of landscaping, or a swimming pool, that's going to cost you tens of thousands of dollars. And by the way, if you are looking to install a brand new home in your backyard in the Sacramento region, it's going to cost you well over $100,000. How insane is that? So if you're budgeting to buy a brand new house, don't just look at the purchase price, look at the overall price, including landscape in the backyard if you don't want just dirt in the backyard. Also, on a side note, this may vary by the area. There may be some parts of the country that have partially landscaped yards, maybe a yard with grass, for example. But in California, it's very common to just have dirt and then drainage, and it's up to you at your own expense to actually landscape it. I will say though, on rare occasions, if a builder is having trouble selling a house, they might here's what they actually do. They might, instead of reducing the price, they offer incentives such as a closing cost credit, free builder upgrades, or a lower mortgage rate, which I'll go over later in the video. They may offer that, but if the house does not sell and it's a completed home, they may also landscape the backyard in order to entice a buyer to buy that house. So on rare occasions, I do see that builders landscape the backyard, but I would say probably 99% of the time, you're looking at a dirt backyard and you have to landscape it yourself, which can be very, very expensive. That leads me to my second red flag, and this is a really big one, and one of the main perks on buying brand new home construction, and that is finance incentives. Builders have a glut of houses to sell right now, and in today's higher interest rate environment, builders are actually getting very creative. I've personally seen builders offering teaser rates as low as 1.99% for the first year, and even 30-year fixed rates of around 4 to 5%. This is obviously much lower compared to the rates you get to buy an older house in the same area. I want to share exactly how much money you can save with these incentives, but I just want to briefly describe how these incentives work. In general, for the most part, builders have a preferred lender, or they actually have a lending company, and that preferred lender, along with the builder, helps pay for this rate buy down, for example. Let's just say that prevailing rates for a 30-year fix is 7%. Maybe they're offering rates at 5% for 30 years. That lower rate, down by 2 percentage points, is paid for the builder and also the preferred lender. Now you can see that, but also you can see temporary buy downs. And let me kind of describe what that is. So a 2-1 buy down, for example, decreases your mortgage rate by 2% in the first year, 1% in the second year. Year 3 through 30, it's basically the prevailing rate. So let's say we have 7% rates. Year 1, it would be 5%. Year 2, 6%. Year 3 through 30, it would be at 7%. That's a 2-1 buy down. Now, I want to share this example because this is an actual finance incentive that's being offered by a builder in the greater Sacramento area. You've probably seen this in your neck of the woods as well. This is what we call a 3-2-1 buy down. This one, for example, the final rate is at 4.99%. This is really important because this one is especially good because you want to look at your final rate. If your final rate is just like the regular rate you could get when buying an older house at 7%, for example, then it's really not a big benefit. This one is a big benefit because your final rate is still well below today's prevailing rates for a 30-year fix. At 4.99% is the promotion. So this is a 3-2-1 buy down, which means that in year 1, your rate decreases to 1.99%. Year 2, it increases to 2.99%. And then year 3, it increases to 3.99%. And years 4 through 30, it increases to 4.99%. So therefore, year 1, your rate is 3 percentage points less than the final rate. So here's your P&I payment, principal and interest, excluding property taxes, insurance, HOA, etc. Just want to compare how your payment fluctuates for these this promotion compared to an average 30-year fix at 6.85%, for example. So your monthly payment at 1.99% would be about $2,179 per month, and that would be about $26,000 for that first year. Year 2, it increases to just less than $2,500. Year 3, $2,800. Year 4 through 30 at 4.99%, it increases to $3,165 per month. And your total payment that year, or each year, years 4 through 30, would be about $38,000. Let's now compare this to a rate at 6.85% for a 30-year fix. Your monthly P&I payment would be approximately $3,900 per month for 30 years. Therefore, your annual payment would be just over $46,000. Compare that to your first year payment for this buy down, it would be $26,000. Therefore, in year 1, you would save $20,000. Year 2, you would save just over $16,000. Year 3, $12,637. Years 4 through 30, in other words, each year through the end of the term of the loan, you would save on average every single year $8,432. Therefore, your total savings over the first 4 years, when comparing 6.85% for a 30-year fix compared to this 3-2-1 buy down, you would save a whopping $57,924. Plus, you'll continue to save $8,432 per year until you're able to refinance to get to a lower rate than the 6.85%. And by the way, I made a separate video going into detail regarding how buying a new home could actually save you money compared to buying an older home. And the title of that video is this right here. I'll also provide a link to that video in my pinned comment on this video. And in addition, I'll provide a link in my video description below as well. Now, going back to these finance incentives that are being offered by home builders, on top of these lower than market rate mortgage rates, I'm also seeing builders offering a closing cost credit. Some of them are offering closing cost credits upwards about $50,000. And that's defined by a flex credit in which you can use that $50,000 to reduce your out-of-pocket expenses in buying the house, not your down payment, but your closing costs, buying down your rate or having any reductions in sales price or a combination of all that, including any rate buy downs as well. And those finance incentives in general are for completed houses, and on top of that, working with the builder's preferred lender as well. So bottom line, when comparing new houses to old houses, don't forget to factor in all the incentives that are being offered by the home builder. That leads me to red flag number 3. This is more like advice for you guys though. Number 3 is the strategy that most people do not know about is that if you want to get the best deal on a brand new house, regardless of where you're looking to buy, anywhere across the country, you're going to get the best deal on a completed house in which the builder has already built it, and they just need someone to place an offer and close on it because it's already completed. So let me kind of give you an example regarding homes for sale at builders or at home builder offices. So if you find like a new build you like, you go into the sales office, you talk to their sales rep. This is the builder sales rep. There could be houses that are for sale. I should say houses that are for sale that are dirt lots. They could be homes under construction, or they could be completed houses as well. I'll talk about each of these though, because this is very important, because the motivation of a builder to sell a dirt lot compared to a completed house is completely different, which really impacts the incentives and all the freebies that builders will be given to home buyers. All right, let's first talk about dirt lots. So let's say you walk into the sales office, they have a lot of houses for sale. What you're really doing if they don't have completed houses, you're selecting a lot that you like based on the dimensions, the location, and also the home they plan to build on that lot. So in general, they release a small number of lots, sell those, then move on to the next batch. So if you're looking to buy a home, it could be a dirt lot, but the home is already selected. So you're selecting the lot, but also the home as well. So what you do there is that you select your lot, you place your deposit down, then you can select all the upgrades, the fit and finishes in the house, because in general, those are not selected yet because it's just a dirt lot. So this is actually the most expensive route in buying a brand new house. The upgrades can be literally, I've seen upgrades upwards of about $350,000 on one house. So instead of a $500,000 house, they're buying an $800,000 house because all the upgrades they selected. And the reason why this is the most expensive route if you want to buy a brand new house at a new home development is because the builder, again, is not incentivized to give you a great deal on a dirt lot because there's not a lot of sunk costs on that dirt lot compared to a completed home. There's a lot of costs associated with building a house, right? So that leads me to number 2. Home under construction could also be for sale as well. Now, depending on the progress of that construction, you may have the option to at least select some upgrades in the house, but likely a lot of the upgrades will already have been selected by the builder. So that's one of the positives of buying a home under construction, because you can move in earlier. But on top of that, you still may have the ability to select some options at the house depending on how long they are in the process. But again, because the house is not completed, the builder is not going to throw all the incentives at you like a completed house. Now, speaking of that, if you see advertisements online about, 4 or 5% interest rates or a hefty closing cost credit, for example, if you're seeing that online for new houses for sale, that's likely for move-in ready houses in which the home is going to be completed very, very soon in the next 1 or 2 months, or it's completed, already built, and the builder wants to sell it. They're highly motivated to sell a completed house compared to a blank canvas, for example. So you can definitely get the best deal on completed house, but here's a pro tip for you guys. I haven't seen anyone really mention this, but I just kind of came up with this. This is probably the accountant in me, because if you want to get the best deal, purchase a home that's completed, but buy it at fiscal year end. In other words, when no one is shopping for a house in the winter months, for example. So let me give you guys an example. Let's just say the builder, their fiscal year end, that means when they close out their books, let's just say it's November 30th every single year. So the end of their fiscal year is November 30th. So you're gonna get the best deal if they have completed houses for sale and you place an offer in November, because they're gonna be very motivated to close out their books for their fiscal year end in November. So if you want to get the best deal, completed houses, but also get under contract and go negotiate a good deal in their last month of their fiscal year end. So I did some digging for you guys and actually was looking up for the biggest home builders across the nation, when is their fiscal year end? It's not necessarily December 31st. So provide that in the screen here to the right. You can see here that most of the fiscal year ends are in the range of end of September through the end of December. So if you're looking to buy a brand new house, look to see when their fiscal year end is and go find a deal. That leads me to number 4, a critical mistake that a lot of home buyers make, and they're not even aware of this. This one could be a massive headache because if you don't take your realtor or your real estate agent with you during your first visit and looking at a brand new house and you register, that builder is likely not going to allow you to be represented by your own agent if you decide to place an offer on one of their houses. In California, we have a unwritten rule here that if the buyer goes to the sales office and they register and they're not with their agent during their first visit, then the builder is not going to allow you to be represented by your own real estate agent. This means you're working basically alone without someone to help negotiate you a good deal on the house, review the purchase contract and the disclosures, and help you navigate any inspections as well. Instead, without your own representation, you'll be working with the builder's sales rep, which is an employee of the home builder, which obviously wants the highest price and best terms for their builder and not you. Also, here's the thing, in Sacramento, I imagine this is very common for other parts of the country as well, that builders are paying real estate agent commissions as well. So you're not saving money by going solo, but you are losing out on having an advocate in your corner. And finally, number 5, this is a really important one. Hope you guys are still watching today's video. And by the way, if you are still watching today's video, then hit the like button. I greatly appreciate that. This is a really big one. And again, I don't see anyone talking about this as well. Number 5, and this one gets overlooked all the time, and it could cost you hundreds, if not thousands of dollars every single year as well. The upgrades you choose on buying a brand new house, you have to pay property taxes on those upgrades. When you walk through a model home, for example, it has all the upgraded appliances, countertops, cabinets, flooring, etc., even high-end lighting. Everything you look at in those model houses normally are could be hundreds of thousands of dollars in upgrades, for example. And like I mentioned earlier on, I've seen builder upgrades in the range of $10,000, $20,000, $50,000, and upwards over $300,000 in upgrades in buying a brand house. And that's on top of the base price and any lot premiums as well. Now, here's why it really matters. And again, I don't see anyone talking about this because let me give you an example. Let's just say you buy a house for $500,000 and you decide with a builder to put in $100,000 in upgrades, for example. Your property tax basis after you close on the house is not $500,000, it's actually $500,000 plus $100,000 in upgrades. So it's actually $600,000, not $500,000. So therefore, the upgrades you chose, in this example, $100,000, you're going to have to pay property taxes on that $100,000 in upgrades. And if your property tax rate is a minimal 1% per year, that's going to be a $1,000 extra fee you pay for property taxes just because you want that fancy kitchen and flooring, for example. Now, 1% is a very low rate. If your property tax rate's 1.4%, for example, on $100,000, you're going to pay additional $1,400 per year. On top of that, upgrades you do select at the home builder's office also do not necessarily translate to an increase in your home value, for example. So for example, if you opted for a better appliance package, and that's going to cost you, let's just say, another $10,000, then guess what? Your home value probably didn't go up at all, even though you decided to pay for an upgraded appliance package for $10,000. So after you place a deposit down on a dirt lot, for example, and then you want to go down to the design center and select all your fit and finishes there, all the upgrades, just be cognizant of the fact of your purchase price, but on top of that, any upgrades you choose will also increase your property taxes as well. Alternatively, If you buy a house and just buy, the base product, the base price, and you do any minor updates to the house, such as like putting new floors in, for example, then that's not necessarily going to increase your property taxes. That's a top 5 things that you definitely should be aware of if you're looking to buy a brand new house in Sacramento or anywhere across the country. If you found this video helpful, then please hit the like button. Also, consider subscribing as well. And of course, if you're interested in buying a house in the greater Sacramento area, check out my other YouTube channel, which is Sacramento Home Goals. With that said, I appreciate you guys so much for watching today's video. Also, please leave a comment below as well. How do you guys like these style of videos as well? A little bit different than what I normally post as well. With that said, I appreciate you guys so much. Have an amazing day and I look forward to seeing you on the next video.